All right, that should be it. That should be it. How are we, guys? Talk to me. Good morning, good afternoon, good evening, guys. I think we had a little bit of a hiccup there, so apologies for that. Um, Let me just get the official link over here. I think I sent the wrong link. Free chat. Oh, right here. All right, all right, all right. Let's do it. All right, you're back in, Stuart. You're back in. Cool. Everybody's back in now. Happy days. Yeah. So today is a big day. Today's a huge day. We have NFP. NFP is a red folder restricted USD news event. So NFP brings a lot of volatility. It brings a lot of volume into the market. And the reason actually why I wanted to do this stream today is because years ago when I first started, well, really 8 years ago when I first started trading, I was trading NFP and I was at university and I put a trade on and I actually lost, I mean, thousands and thousands and thousands of pounds, right? This is GBP, not dollars, right? And I lost it literally in 3 seconds trading NFP. And so the reason why I want to do this stream today is to help you navigate NFP in a professional, in a structured way, and in a way that is actually going to benefit yourself, not only today, but long term as well. Okay. So I don't want you to make the same mistake as me. That's the ultimate reason why I'm doing the stream today. Um, but I do also want to start up regular free trading live streams as well. So of course, like, I stream with the exclusive community and the one-on-one mentorship, of course, right? But I need to give back to the free community as well. And so this is a way that I can do that. Um, And so, yeah, I'm thinking of doing these. I haven't got a concrete amount per month, but sorry, per week. I want to do maybe one a week, maybe two a week. We'll have to see. We'll have to see, but I want to make this a regular thing for yourself. So let me know in the chat, right? Oh, why does that keep turning down? So let me know in the chat. Do we sound okay? Can you see me? Can you see the charts? How are we looking? We looking okay? Hey, Greg. That keeps turning down. I don't know why that keeps happening. Auto level. Yeah, that shouldn't keep turning down. But yeah, guys, like, you guys can probably let me know in the chat. Yeah, sound keeps dropping a bit. I don't know why it's sort of automatically dropping off. Um I don't know, maybe you guys can just turn up your computers, but the gain on the mic, so the mic gain keeps dropping from 50 decibels to 37. Um so like I'll put it up to 50 and then it'll just drop automatically. I don't know. Anyway, so yeah, in 15 minutes we have NFP. Let me just show you guys what that looks like on the economic calendar. So, boom, right here. So this is the FTMO economic calendar. This is where I look for my restricted news events. Okay. And you can see right here, you can filter. So in the middle, I'll put a link to this in the chat as well if any of you guys want to check this out. Um, Black screen. Hmm. Oh, you can see now? Put a yes in the chat if you can see the economic calendar. Yeah? Yeah? Okay, perfect. So yeah, today, right, you can see in the middle you have this filter. This is very useful. So right here it says show only restricted events. And I've sent a link to this website in the YouTube chat as well, right? And you can click this filter, and then this is going to bring and show you the restricted events for today, right? So you can see, right, we have non-farm employment change, which is non-farm payroll. Notice how it's in red, right? It's highlighted in red, which means that it's red folder. It's also restricted. So you don't want to trade directly into this, or basically, if you have a trade before NFP, you want to close that out like 15 minutes before, because this news event NFP, right? It creates a huge amount of volume, a huge amount of volatility, which could ultimately blow your account in seconds, right? And so it's very important that you adopt a framework to trade restricted news events, because if you're not aware of them, you could accidentally trade into one, and you could lose a funded account, or you could lose your personal, you could blow that account. Very easily done, right? And I mentioned the story at the start where I did that exact thing, which is why I'm doing this stream. And so it's very important that we have this framework. So you can see this is a red folder restricted USD news event. Right here, you can see instrument. So this tells you that the instruments that NFP affects. So you can see US dollar. So anything crossed with the dollar, so like euro dollar, GBP USD, any FX pair crossed with dollar, and US indices. So US indices, this is US 500, ES, right? US 100, NQ, and this affects gold and the dollar as well, DXY. As you can see here, you've got the countdown of when that news event's going to be. You can see that's in 10 minutes time, and that is at 1:30. That's UK time, which is 8:30 Eastern time, and the date as well. So it's today. You can see right here, you have the forecast, you have the previous, you can look into it in more detail. It tells you a bit about the event, etc. Right? I think it's this button. And it tells you that when you're trading a funded account, you need to close your trade 2 minutes before. So if you have a trade before NFP, like let's say you had a trade in London and you were holding that trade, right? You would close that out. The rules are 2 minutes before, but I would always close it out 15 minutes before, just to be safe. Just to be safe. Um, like you can see, that's the rules from the prop firms, and that's pretty uniform across most prop firms, I would say. Where a lot of people go wrong is they look at these forecasts over here, and they're on Twitter, and they're like, "Oh, what's NFP going to be today?" And they're trying to work out. It came in, hot. The previous one was hot at 130. The forecast is 58, right? That's way below the previous. So then people start trying to formulate or make up a narrative in their own mind to predict what is actually going to happen on NFP. The problem is that we don't bloody know what's going to happen on NFP. We have no idea, right? And so it's not even worth, you can agree or disagree whether you think about these events or you try to predict them. I used to. I used to try find out, oh, what's more likely to happen, and maybe I can place a trade before, and that could be the outcome. And you're thinking about the money and the volatility, and a lot of FOMO, fear of missing out, can come in either just before or on the release of NFP. And so the reason that I'm doing this stream is to make sure that, well, one, you do not have any FOMO, and two, to help mitigate that FOMO. So it's okay to feel FOMO. Like, we are humans, you're going to feel emotions. That's normal, right? That means your brain is working correctly. But what is not okay as a trader is to act on that FOMO, meaning that you feel the FOMO and then you use that to make a trading decision. So, what I'm trying to say, very simply put, is that we need to be viewing the markets objectively and systematically as opposed to using emotions or letting emotions come into your trading. Okay. So, yeah, we have NFP today, which I think I've said 37 times. But for anybody that's just tuned in, there's one more time for yourself. So now let's pop back over to the charts. Over here. Draper, Mr. Draper, welcome, mate. Yeah, sure. I can share the win rate and everything in my strategy. Sure, man. You know, that's the goal of these streams, right? Is to um be very transparent with you guys about win rates, drawdowns, expected returns, and to give it real, be realistic and not do what a lot of people do, which is pull the wool over people's eyes. I see this all over the industry. You've probably been a victim to this as well. Um, and so, yeah, we operate with around a 45 to 50% win rate with a 1 to 2 risk to reward. So that is realistic. You see people coming in and they want like a 90% win rate with a 1 to 3. And it's like, if you actually think about that, if you actually had that, you would be making billions of dollars, right? You would be, even a 50% win rate with a 1 to 2, you're printing money long term. You have something that works long term, but like, an unrealistic expectation of win rate is a very common thing that I see. Okay. So yeah, that's my goal as well on here, is just to give you like the good, the bad, the ugly. You could call it warts and all, just everything. um yeah, the warts. I want to show you the warts and just what trading is really like. Because it's hard. Trading's really hard. Um let's check the chart over here. Yeah, man. Like I can see there's a couple messages here about like you're in a losing streak, right? Losing streaks are normal. Losing streaks are part of trading, right? So one of the things that I always teach my students, certainly from the get-go, is you need to get amazing at losing. You need to become an amazing loser, right? Which is hard because me personally, I'm a perfectionist. I don't like losing. I want it to be perfect. And so you realize that with trying to be, with perfectionism, that's a very dark place to be in trading, right? Because you cannot be perfect. You can control your entries and your exits and your where your stop loss is going to be and all of that. But you cannot control the distribution of returns, meaning you cannot control when you win and when you lose. And so it's having that separation from, okay, I need to be very, very good at losing. Otherwise, because 50% of the time I am going to be losing, right? So think about it like this: you place 10 trades, statistically, you're going to lose 5 of them. You place 10, you lose 5. Why? Because that's what the data says, right? That's what the years of backtesting tells me, right? And so being a good loser is really, really important. What hours do you set the Asia range? Asia range is from 6 p.m. This is Eastern time, New York time. So that's UTC -5. 6 p.m. until 11 p.m. is the Asia range. Okay, right. Let me just jump into actionable trades. I've done enough waffling. Let's dive into the meat and potatoes of what is going on and how NFP could actually act as a catalyst for today. So, looking at gold here on the 15-minute time frame, right? As you guys know, we trade gold and we trade US 500, right? You can see right here, The 50 exponential moving average is less than the 100, which is less than the 200. So this indicates to you as a trader, or it should do, right? Or you tell me, what does this indicate to you? Does this indicate anything to you? Let me know in the chat. What does that mean to you? 50, 100, 200, when they're in this order right here. What does that mean to you? All right, you guys got it. Sell bias. Exactly right. Exactly right. So, meaning that you will only be looking for shorting positions. So, when you're looking for shorting positions, you don't care about sell side liquidity. So, you have sell side liquidity below Asia low, below London low. We don't care about that. All that we care about is where is the buy side liquidity resting, right? So, we have London high, which is between 3 and 5 a.m. Eastern, and we have Asia high. So we have London high buy side liquidity. This is the closest level. This is the closest point of interest that has not yet been mitigated, which means that it's not been taken out yet. And so the expectation with NFP is we come, we take out buy side liquidity above London high, and then we can look for our entry models during the New York kill zone, that specific time window of price, to look at shorting this market to the downside. Okay. So this is the trade plan on gold today. So the expectation is always when you have a news event, red folder event, that red folder will act as a catalyst to manipulate. That is always the expectation. That when you have a red folder, I'm going to repeat that because it's really important. When you have a red folder, the expectation is that red folder will act as a catalyst to manipulate. If you're sell bias, the catalyst is to manipulate higher. Okay. Does that mean that it has to happen? Of course not. But that's the expectation, right? So remember, we're not trying to predict markets. We're trying to base a plan and make a plan. And then if the rules start to line up, then you can take a trade off the back of that. We're not trying to predict. We're actually trying to be more reactive in the market. So yeah, we have NFP in 10 seconds. So let's see what volatility we get in the market. But the expectation always when you're selling or your sell bias is taking out a form of buy side liquidity, and red fold in news events are an event that can bring the volume to that level. Okay. So don't get me wrong, like it can always drop as well. That's of course an outcome. Like I'm not a genius in the market, but the main thing is understanding where your points of interest are going to be, your areas of value, right? London high, Asia high, and then that's the levels that you want to be shorting around. Okay. So if we just look very closely here, did we take out this London high? Not yet. Not yet. But we've started to get what the expectation was, which was taking out this London high buy side liquidity. So that's going to be like step one is bias. Step two is, can we take out buy side liquidity? That's currently happening right now. Okay. So notice how NFP acted as a catalyst to take out buy side liquidity. Okay. Don't get me wrong, that doesn't always happen. But when you go back and you test this for yourself, you will realize like these news events are almost like an excuse to move the market, to manipulate traders. And then when you start to see this, right, you cannot unsee it. That's one of the things that I realized. And when you're seeing these manipulations happening in real time, you can't unsee that. And then you think back to all of the times where you were maybe short here, right? And then NFP came out, you got stopped out, and then you get your entry model, you confirm, and then we drop lower. and you were stopped out and then the price rolled over. So it's ensuring that you're not sat there with your pants round your ankles, and it's making sure that you can be patient and disciplined. And if it sets up, and does come to your level, your point of interest, like London High or Asia High, then you can think about shorting. We've all been there with our pants round our ankles in the markets, getting stopped out, and then price reverses is the common one. And so this helps to prevent a lot of that happening. Don't get me wrong, sometimes your pants are just round your ankles, but hopefully not too often. Um, Buy now, sell later? Definitely not. I know you're joking, but yeah. Why is London 2 hours? That's a very, very good question. Because the London kill zone, this is not the London session. So this is the London kill zone. And what that means is like this is when the most amount of volume is actually coming into the market. So if you go back and study something called intraday seasonality, which just basically means the caveman way to put that is when trend, right? When does market trend? And intraday seasonality shows you that. And that is when the markets trend heaviest. Like today's a good example, right? Look what happened before London, consolidation. What happened during London? Distribution. Or simply put, continuation, right? What happened before New York? Consolidation. What is happening during New York? Distribution. Or some form of continuation, volume, volatility, however you want to describe it, right? And so this just gives you that specific time window, which is London open, which is 3 a.m. Eastern, to 5 a.m. And because that's when the most amount of volume comes in, and then you get a drop off. See this consolidation here? That's a drop off of volume. And you know that just based off naked price action. And obviously we're looking at a sample size of one, which is not that's not too beneficial, but you can see it in real time right here, the drop off in volume. So what I'm saying is if you go away and study intraday seasonality, when does the market trend? That's why we use this specific time window. A lot of traders they're operating in windows that are too large. Like it might be like a 3 hour, 4 hour window. That's not when the bulk of the volume is coming in. In general, it's at the open, London Open, and then for an hour and a half to 2 hours after that, right? Great question. Great question. So now that we've taken out buy side liquidity here, I'm going to be looking for our entry model, which is literally just we use naked price action here, and that's a 15-minute bearish confirm, and that's during New York kill zone, which is between 8. Really, it's 8:15. That's like the first confirm to 10:30 a.m. Eastern. So this is the next step that we're looking for. Okay. Do we come out and take Asia high? Maybe. Maybe. But again, we're not trying to predict that. We're not trying to predict that, right? We're just trying to react from naked price action. All right. All right. So let me mark on Asia high right here. Asia high buy side liquidity. Yes, 1 to 2 months of drawdown in any strategy is normal. If you don't think that's normal, maybe you haven't done enough back testing, right? Yeah, like drawdowns are normal in trading, right? And what often happens, the common thing that I see is somebody will go into a drawdown. They will lose maybe 6, 7 trades in a row, which is possible. Like if you're intraday trading, very possible. But that's already maybe shifting your mind because maybe you don't think that's possible. Or maybe you think like 3 losses is normal. and anything more is a problem. But what I'm saying is, most people, they will take 3, 4, 5, 6, 7 losses in a row, and they bounce. They bounce to the next strategy, the next community, the next, whatever. And that's the common cycle that I see in trading. Um, so yeah, it's the reason why people do that is because they don't have enough conviction and they don't have enough belief in their trading strategy. It's as simple as that. So then the question becomes, well, how do you develop conviction? How do you develop belief? And to do that in a trading strategy, there's two ways to do that. One, you back test it over years of data. That's number one. And number two is you're in the trenches like this, like yourself on the stream right now, right? You're in the trenches on a daily basis, executing, and you experience drawdowns for yourself. Not only do you experience drawdowns, but you climb out of drawdowns yourself as well. Okay. So it's not just about, executing and trading. It's more about going through that pain yourself and experiencing drawdowns for yourself. And then coming out the other side and looking back like, oh shit, that was a really tough time, and you survived that drawdown and you climbed out of that drawdown. And that is ultimately that's the second way that you're going to build conviction or belief. So remember how I spoke about how most people bounce, they take whatever, 3 in a row, whatever, losses in a row, and they bounce. The reason they do that is because they lack conviction and belief. So your primary focus as a trader should be developing conviction, developing belief. Okay. And a lack of conviction, a lack of belief will make you doubt and hesitate your trading strategy. So, like, for example, where was this? So this was US 500 yesterday, over here. So we had this amazing trade yesterday, right? You can see we were bullish. So 50, 100, 200 EMA. We took out London low sell side liquidity right here. We confirmed during kill zone. We took out liquidity during kill zone, which doesn't have to happen. We confirm and we get that 1 to 2. But the people that are doubting or hesitating or lack of conviction or lack of belief, they don't take that trade. So it's getting to a point where no matter where you are in your drawdown, your current situation, that you have the belief to still just execute without hesitation. It's getting to that stage. That's where you need to be. Okay. So yeah, I talked about the two ways how you can do that, which are really important, and it will prevent you from going in that cycle of really the common cycle is you take a few losses in a row, you doubt, you hesitate. You then do not take a trade because you're doubting and hesitating. So you miss a winner, right? You then revenge trade, and then you take a loss, and then you keep bloody getting stuck in that cycle. And then off the back of that, within the doubt and hesitation, you also have strategy hopping, right? Which is linked to doubting and hesitating. So this is like the common cycle that I see people in. And so conviction and belief will prevent you from going into that spiral cycle, etc. Right? Okay. So now we're looking at US 500 on the 15-minute time frame. Sell bias, right? 50, 100, 200 EMA, very clearly sell bias. Momentum is clearly to the downside. Buying this would be suicide. Buying this would be like crazy, right? So the expectation for today, which I don't know if we're going to get, we're pretty far from this buy side liquidity, this London high, but it's going to be something like this. That's going to be the trade plan for today, right? And unlikely, I must admit, right, based on probabilities, because we're so far away from this level, but that's the plan. It doesn't mean that I'm then going to start changing my view or my system or what I believe, because the market is miles away from where I want to trade it from. So what I would do, like if I wasn't on this stream, if you were, you're working full time or you're in full time education or you're with your friends or whatever, right? You would just set an alert at the London High. So there's a plus icon right here. If you look closely on the top right, plus icon, add alert. Okay. And then you would go about your day. You would do things as normal. Maybe you're in work, you have meetings or whatever. And then when your alert goes off, you will be notified to your phone or your computer. And then that's when you're going to be looking at executing. But until you get up to this level, until you break that London high and manipulate, right? Of course, this is going to induce buyers, right? This is inducement right here into the market, thinking the market's going to go higher. Okay. But it's also going to be stopping out. Imagine anybody that sold in London who are in heavy profit or getting greedy. A lot of them traders are going to have a stop loss above London high and above this high. And so this will be stopping them out. And that is what is ultimately providing buy side liquidity. And buy side liquidity is what bigger players can use to position effectively into the market to avoid slippage. Okay. We need that as traders. We need a lot of people who are trapped, a lot of people who are on the wrong side of the market, and we are essentially selling into them buying. So think about anybody buying here. We are taking the flip side of that trade and looking at shorting when most people are buying, or most people are viewing that as a bullish market, right? As a breakout traders, right? And we're doing the opposite and sort of treating it like a mean reversion back inside the range. And then we can look at targeting and taking that lower. Okay. So, yeah. Let me just check the chart over here. Here's a question from Imran. Can kill zone sweep be an A plus setup and pre-session sweep a B setup? Not at all. For me, it doesn't matter if the liquidity sweep happens before the kill zone or during the kill zone. What matters is that your confirmation comes within the kill zone. That is what is important. So liquidity sweep can happen before, but confirmation has to happen during. Okay. So I would not filter like, oh, this is A plus, this is B. In my eyes, based on my data and my testing, they have the same probability of success. And so they're both A plus, right? Yeah, that's right. Most people, here's a comment from Draper. Most people give up, but then, you can have 3 or 4 win months in a row, right? Yeah, that's the whole thing, right? Like you could, like I talk about it all the time in Q4. Let me just check the charts before I talk about that. Yeah, in Q4, which is the last 3 months of 2025, we did 25R. Okay. And then like people have like a 5 or an 8R drawdown and they shit the bed. So it's perspective is really important in the markets and understanding where you have come from. As in like what happened in the last quarter, what happened in the last year, what happened in the last 2 years. And rather than getting caught up in that short-term mindset and like zooming out and having that long-term perspective. So important. So important. I do not adjust. So this is from Otaku. Should we adjust the session times on Monday? No. So the session indicator automatically plots everything for you. So you don't have to adjust anything. It's just automatic. Okay, so on gold here, sell bias. We've took out buy side liquidity. And so if we close bearish in the next, we have 13 minutes. If you look very closely on the right-hand side of the screen here, see the timer? 13 minutes. That's how long we have until this current candle closes. Okay. So it's really important that you wait for confirmation. You wait for candles to close because a lot can happen in 13 minutes. Example, this could be creating the bottom wick and then flipping and then taking out buy side liquidity. So it until you get the closure, it's hard to know and hard to understand like what is actually going on in the markets, right? So yeah, if this candle closes bearish in the next 12 minutes, I will be getting short on the break of the low, wherever that low may be. Right? Remember, we have time, and then the invalidation for me will go above the liquidity sweep high, which is right here, and then I will be looking at targeting a 1 to 2. So we have a lot of time, but let me just sort of frame this for you. So let's say we did close here. My entry would be on the break of this current low, stop loss above this high, and then targeting a 1 to 2. So it's going to look something like that. Okay. So I want you to know that this is not me with a crystal ball trying to, bloody predict what's going to happen. This is me like thinking in advance so that you can see my thought process in real time to be like, okay, if we close bearish here and sort of build a story of how I'm actually going to short this market today, right? Rather than like just having a generic crystal ball and you're like, oh, I want to short it, but you can't really frame it. It's really important to kind of build a story in real time. Which is also why I think these streams are so helpful because you can see how I'm thinking in real time. And either you resonate with that or you do not. Right? It's as simple as that. This is not salt water for the OGs in here. This is just normal agua. I know the OGs in here will get the salt water. I went through a stage where I was drinking a lot of it. I know a lot of you guys did as well. Pink Himalayan salt water, but no, this is just normal water. I know there's a lot. I can see a lot of the OGs in the chat, so shout out to you. Just normal water today, guys. Yeah. So now this is like the waiting game. This is like the patience game. So I know that I want to short this market, right? I know that I want to sell this market, but I now need the market to show me that it's willing and that sellers are actually willing to step in here. So this is where a lot of traders go wrong, right? They know that they want to short it, but rather than waiting and being patient, they FOMO in or they overtrade or they force a trade, a stupid trade without confirmation. And I've done that so many times over the 8 years of my trading. And it does not end well, as you may or may not know. But yeah, I cannot stress enough how important it is to wait for candles to close here, for the market to show its hand and to tell you like, okay, we've took out buy side liquidity, buyers have been induced, right? Think about it. Anybody that sold in London on gold, sold gold in London, they just been stopped out. They just got stopped out. A lot of people. I'm not saying everybody, right? That's not a real thing, but a lot of people have just been stopped out. So if you're short and you get stopped out, you have to buy at current market price. So if you sell and you get stopped out, you have to buy back at current market, which is here, which is providing the buy side liquidity. Likewise, a lot of traders who are FOMOing in, right? Think about the average trader right here. They see this huge gladiator candle, huge candle. They're going to FOMO in at the highs, providing buy side liquidity, right? That would have been me 8 years ago, seeing this huge gladiator candle, buying this, expecting higher, not understanding context of where we are and why, how stupid that trade looks. Like if you zoom out and just look at, like we've been selling off for the last 3 days. Okay. So really, we've been selling off the back of, the economic events that were going on in UAE. So how stupid that trade looks. You're framing a trade based off the release of NFP, but the macro is telling you to sell, but one candle is telling you to buy. Right? So notice how stupid that is. Like you're trying to fight the macro with one candle. You expect a reversal from one candle. That's the FOMO mentality. Crazy mentality, right? So yeah, that's one thing that the EMAs gives you, is that the common thing that people tell me is they're very calm now. Because the FOMO goes away because you're like, oh, I'm sell bias. NFP comes out, cool, I'm sell bias. And there's not any discrepancies or subjectivity. It's very clear, right? So yeah, we still got 6 minutes for this candle to close. So far, we look like we could have a trade together here. Remember, this is the plan right here. Yeah, this is the plan. So now we wait for it. I don't trade FX. I trade equities and I trade metals. So I trade US 500 and I trade gold. So I don't really look at FX. But I've done some testing, like GJ. Some of the guys in the exclusive, they trade GJ, they trade. So GJ EU can be decent as well, and USD CAD as well. But it's one of those things, like if you have an option to trade either, when I made the switch from FX to like equities and metals, my win rate is so much better for me doing that. Why? Because equities and metals trend way heavier than FX. Like sometimes euro dollar is going to move well, like it'll move very clean. A lot of the time it's going to chop. And you can tell by the macro as well. Like if you look at a euro dollar weekly versus like a gold or a US 500 weekly, you'll see that. So one thing to note is if it's clean on the macro, so if it's clean on like the weekly, meaning like it trends heavily on the weekly, it will trend heavily on the intraday. Okay. So that's just a good check. If you're ever like, oh, like a mental check, like, do I want to trade this asset? Check the macro first, the weekly. And then if it trends on the macro, you will see trends on the intraday very clearly. Okay. Yeah. All right. So yeah, we got 4 minutes to this closure, and then it looks like we're going to be executing together. So happy days. Let's see. Highest loss in a row for this strategy is like 8 or 9, or like between 8 and 10 from my own back testing. Yeah. Which is actually pretty good. Like it sounds funny to say that that's good, right? But if you go and study intraday strategies, like if you drop down to the 1 minute or the 5 minute or whatever, a lot of intraday strategies, there's gonna become a time where you lose like 15 or 20 in a row. So yeah, it's kind of funny, but to say that's good seems a bit weird, but it actually is on an intraday perspective. If you're swing trading, sure, you could maybe expect lower drawdowns, um, but not when you're intraday or day trading, right? Does this work on NQ? Yes, it does, but it works better on ES. So I'm more in the camp of mastering individual assets. And so, you can trade either, but I just trade US 500. I get more than enough setups. It performs better as well. Okay. Never too large of a stop loss. Not for me. Not for me. I just take my trades without hesitation. Why? Because that's what I did in the data. So I just replicate my data in real life and try to remove as much emotions as possible. So now is a very good time to work out your sizing and your risk. Um, so if we close like this, you're going to be entering on the break of this low. And I want to make this clear, I'm not short yet, but the trade's going to look something like this. I want to make this really clear. I'm not short yet. I'm going to say that again. I am not short yet, but this is what the trade is going to look like, something like this. And now is a good time to work out your sizing, um, and how much you're going to be risking, and what is that using a position size calculator, or you can do that using an expert advisor on MT4 or MT5. Okay, so we have 15 seconds to this closure. And so the trade's going to look something like this on the break of this current candle low. Okay. So now we need to be very patient. All right. So we have seen a valid A plus confirmation. Okay. So sell bias. We've seen buy side liquidity taken out. This is off the back of NFP, which was expected, right? I talked about at the start how that often acts as a catalyst to manipulate, right? We've now confirmed during kill zone. So now we need to be tagged in during kill zone. So we're not entering on the closure here. So, this is really important. We don't enter on the closure. We enter on the break of the low as momentum steps in and we break that low. Really, really important, right? Because price could easily reverse from here because we haven't had that second break of the low. So that's basically increasing the chance that this trade's actually going to roll over by using a break of the low. Okay. So the stop loss goes above here because this is when you're wrong. So think about it like this, right? Your sell bias on an intraday time frame, you've seen a manipulation, you've seen a confirmation, you know why to enter, like why you're entering. And so you would be wrong if we came and made a second higher high. So we have the first high. If I just zoom in and make this very, very clear, we have the first high after manipulating. And so if we do come up here and break this high, that's going to be the second. So this is your first, this is your second after taking out buy side liquidity. Well, what do we know about that? Well, if you have liquidity and you have a high, you short here. So this is us shorting. So liquidity sweep, confirmation, stop loss here. This is your first high. Well, when you get that second high, you've got that second high after taking out buy side liquidity. That's a bullish market, right? Think about market structure. Market structure, high, higher low, higher high. Expectation is then higher low to take price higher. And so that's why we have a stop loss here, because that's when you're wrong. When you're getting bullish order flow, meaning high, higher low, that would be like, this would be your higher low here. And you'd be getting that second higher high. And so it would look something like this. And so that would be bullish market structure. You don't want to be in the market at that point. It's more likely to continue higher. And that's where you could get fear or greed, or I see traders trading out of hope. Like you know that you should be exiting here and you're just like, I'm just going to like hold it. Like, like you should, the tables have turned. But rather than just like taking a controlled loss, you kind of hang on to hope and you're like, like, I'm just going to move the stop to here. Like, I'll just put it above Asia high. I'll just, and I've been there and I've done that. And it really doesn't, it's not good for your psychology, but it's also not good for your trading account as well, right? It often ends in tears, is what I'm trying to say. So that's why the stop loss goes there. And then target, well, 1 to 2. Well, because that is what is optimal based on my testing. So, it's easy to go down the rabbit hole of like looking left and like looking at liquidity from like 17 years ago. And it's like, no, what works out on average the most often, which gives you the most returns, the least drawdown, that's the risk to reward that you should be using. And that's why I encourage, people that are new to this industry to just fix it. And that will also take a lot of guesswork out of your trading as well, because that's subjective. Like if you look back over here, which level do you target? And that adds a whole nother dynamic of complexity into your trading, which you don't need. Right. And so mechanical risk to rewards, there's only two ways that I always use fixed risk to rewards. The only thing that I would entertain is a trailing stop. But the trailing stop would have to be mechanical. It would have to be systematic. I see people using trailing stops, but they don't have rules to keep moving it lower and trailing. And so again, that's adding subjectivity. So whenever you add something to your system, you need to think, okay, how can I make that objective? How can I make that systematic? That's the goal, right? So yeah, just to summarize here, if we break this low, I will be shorting gold on the break, stop above here, liquidity sweep, and target a 1 to 2. Simple as that. I'm not going to then overthink or overanalyze or anything like that, because I'm sell bias. I've seen a manipulation. I've seen a confirmation. I've seen momentum. I'm in a kill zone. What more do you need to take a trade? Right? Like, what more do you actually need to execute? Let's check the chat over here. I feel like it's been a while since I've had a look. Monster stop? Yeah, I get that. But it's that whole thing is like, you take it in the data, or I took it in the data, so I take it in real time. That's the whole point, right? It's also like showing yourself that you can be accountable as well, because if you took it in the data, no matter how you feel in real life, like whether you think, oh, that's a big stop, or oh, I don't know about this one, you still bring yourself back to center and you're like, no, I took that in the data. It was profitable. So I'm going to do it in real life, and make sure that you're accountable to yourself, right? Um, yes, Ravi, that's right. When do I do lives like this? Well, I do lives. I trade live every single day for my exclusive community and my one-on-one students. But in terms of these lives, I want to try do them maybe once a week, maybe twice a week for you guys. I've not decided yet how often I want to do them, but I think once a week would be a good place to start, and then we can take it from there, right? Yeah. So now we got to be so patient over here. So patient. What if we break downward and then we go back up in the next bar? I would keep the sell stop or the plan the same. So like if this candle here closes bullish, right? If this next candle closes bullish and then we break the low on the next candle, that's okay. And that is something that um the way that I describe that is candle theory. So when I teach candle theory, and it's basically where we use inside bars, right? So this is your confirmation high, this is your confirmation low, right? If we don't break the low, so if this current candle doesn't break the low, that's what you call an inside bar, right? And so what you're going to do is you're going to if it's bullish, so this is really important. If the inside bar is bullish, you leave the sell stop here. You leave the sell stop. If the inside bar is bearish, right? This is when you're selling. If the inside bar is bearish, you'd move it. You would move your sell stop from this low to the bearish candle low, and then you get a better risk to reward. You're still entering as sellers are stepping into the market, right? So that's how I navigate inside bars with candle theory. If it's bullish, I would leave the order. If it's bearish inside bar, I would adjust the order from this low to this low. And then I would get a better risk to reward. And that's using candle theory. Great question. I like the way you're thinking. Do I leave trades over the weekend? No, I haven't been recently because you've probably seen with, Trump farts. Trump has a fart, and then the market gaps a million points. So at the moment, I've been closing EOD, which is not EOD, sorry, EOW, which is end of week. So closing EOW end of week. So if your trade is up, wherever your trade is, you close it. If it's in profit, if it's in drawdown, I've just been closing. And that's to protect yourself against slippage, right? But ultimately, that decision is your own. and how much risk you want to take. What one thing I will say is if the stop loss is larger, I would be more inclined to hold because you're less likely to see slippage, or the slippage is going to be less significant. Whereas if you have a tiny stop loss, like let's say you were entering here and your stop was here, well, a gap could take you up to here. So you could think that you're losing 1% and you could lose 4, 5% due to slippage. And so closing EOW is the fix for that, to make sure that you're mitigating risk and not exposing yourself. But again, how aggressive do you want to be? This is personal to yourself, right? But that's what I do. Certainly with current market climates and conditions, I think that's very sensible. So yeah, the question is, can sellers show their hand and can momentum step into this market? That's the question. My TP on this trade, if it's tagged in, is down here at 4957.7. So that's 4957.7. That's where I would be exiting this position, given that it's tagged in. So maybe I can narrate this. Break of low, just so you guys, just to make this crystal clear. So we're waiting to be tagged short, and that will be on the break of the confirm low. So we're not in this trade yet. Sorry, I'm not in this trade yet. That's probably a better way to put it. And I'm waiting to see do we have conviction from sellers? If so, they're going to break this low. Momentum's going to step in, and you should see a continuation for the back end of the day into the PM session. And this should be the high of the day. So the expectation is this is your HOD, which is high of day. When you're shorting, right, especially when you're trading daily cycles, you shouldn't come and break that high of day. If this is going to sell off for the rest of the day and you are correct in what you believe, which is short, right, which is what I believe today, and so if you're entering with an entry model when momentum is stepping in, price shouldn't come back up yet. And that's also why the stop loss is here, right? Don't get me wrong, like there might be the odd time where you get tagged in, we get stopped out, and then like back end of the session, you have an Asia liquidity sweep, and then you could take that as a second option. That is, I would also entertain that as well. So like if I did get tagged in and stopped out, and we have fresh liquidity to the left, which we do, it's unmitigated, meaning it's not being taken out yet, then I would entertain a second option as long as that confirms during kill zone, etc., right? As long as EMAs are in order during kill zone, break of the low, etc., and it's all lining up and looks like an A+ trade, right? So it's important that if you do take a loss, ask yourself, where is the fresh liquidity resting? And if the answer is nowhere, you're done for the day, right? If the answer is, oh, Asia high like today, well, that's your second option. So, it's important to have like the base case of what you expect, which is what we're looking at now. And then in the back of your mind, you're like, okay, if this doesn't work out, like say we don't get tagged in and we do just push higher, well, you have a second opportunity here to get short, and then you could look at trading off the back of that. So it's trying to think systematically, but also with a plan that makes logical sense. Like a lot of people will take a loss and they just like FOMO back in revenge trade. I'm not talking about that in the slightest here. What I'm talking about is, You take a controlled loss, you're asking yourself, okay, where could the next opportunity potentially come from? And then looking at the market from that perspective, as opposed to shit, I've just took a loss, get me back in. I need to make that back. Like, I'm not talking about, of course, that perspective, right? Free source? Yeah, I mean that's the goal here. Skills, man. That's the goal here, right? I want to provide as much value as possible, right? I should be live every day. Yeah, that would be fun. I really enjoy lives. You can probably tell by the tone of my voice, but I really enjoy live streaming. I think it's an amazing way to connect with yourself. Um, but it also makes trading less lonely for yourself as well, because trading's a bloody lonely thing. It's a very isolating thing. So maybe having somebody on the other side that maybe you resonate with. I don't know if you resonate with me. I hope so. But yeah, having somebody that you resonate with, that you can trade with or execute with, and can keep you steady, I think is really, really overlooked. But that's why I do these streams, because even for myself, to just look at the markets all day is bloody one boring. Like, trading should be boring. If it's exciting, you're probably gambling. I think that's fair to say. Um, but yeah, it shouldn't be exciting. Your trading should not be exciting. It's like, okay, another trade setup, follow the plan, follow the process. Oh, cool. Winner, loser. Okay, cool. And then you just like keep doing that long term. That's how trading should feel for yourself. Um, but yeah, when I started, it was the hyper gambling, quick money, overnight success, all of that shiny object syndrome. And that's not trading. That's gambling, right? If you want to gamble, go to the casino. If you want to gamble, go play blackjack. That's not what we're here for, right? I hope that's not the vibe that I give off, right? I really hope, but it's yeah, it's having that steady hand and that calmness, um, which I can touch on. Do I trade with TradingView? No, I analyze on TradingView. I execute on my mobile. I just, yeah, that's what I do. I analyze on TradingView. I execute on MT5 on mobile. I've just done it for so long. I just love it. It's just so user friendly, so easy. But they did have that little update with the buy stops, sell stops, which I wasn't a huge fan of. Um, but yeah, that's my kind of workflow. It's super simple. How did I invent this trading strategy? That's a good point. Well, it's 8 years of experience, and it's really 8 years of watching the markets and understanding how they move and how they work. Um, because how markets work on an intraday basis is very different to a swing trading perspective. Like, intraday trading is all about liquidity. It's all about um, where are buyers and sellers sitting, order flow. Like, there's so many things that is not relevant to swing trading, like volume times. Like, when does the volume come in? Economic events. Like today, we looked at NFP. When can you expect manipulation? NYSE Open, high restricted, news events. Like, it's years and years of I guess suffering and paying thousands and tens of thousands of dollars to the market, right? I've had many mentors along the way. Like, don't get me wrong, I've paid the money. I've been mentored, um, but this strategy is like an amalgamation of everything that I've learned on how markets work, but also how we can use how markets work and trade that in a mechanical way, in a systematic way. Because I have a huge problem with the trading industry, as you might know, right? Which is, people are teaching and claiming that strategies are systematic, and rules based, like follow these rules, but they are not rules based. They are not rules based. Okay. So yeah, it's putting how markets work into a framework, into a system, into a process, and using that experience to do so. Right. I also used my degree. So I studied mathematics and finance at Newcastle University. So I do think a lot of how I think and behave and build things uses a lot of thought process from university, from coding and mathematics and financial modeling. And in my final year of uni, I specialized in data. So yeah, it's a lot of things, I guess, thrown together. But it's a mixture of all of them things that I've just sort of described to yourself, right? Yeah, like that's right. They say they're rules based, they say they're mechanical, and then you implement it. And okay, let me just go down a quick rabbit hole here, just while we're waiting for this load to break. And while we wait for that, I'm going to set an alert here so we can be notified. And so one of the problems that I see is okay, liquidity, liquidity taken out. Okay, entry model. So you have a low. You have this is by the way what I want you to imagine here is like what the average person is teaching you. Right? You have a low, you have a high, you have a low. Okay, entry model, break of structure, pullback, fair value gap, order block, whatever it may be, and then you look for a continuation. And this sounds fine on paper, like it actually makes sense. And what we trade is actually a variation of this, apart from its systematic, right? And we'll get onto that in a moment. But you have a low, high, low break of structure. Then what you do is you go and implement this and you realize, shit, how do I define a break of structure? Is it a 2 candle pullback? Is it a 3 candle pullback? How do I define a low? Which fair value gap do I take? Which order block do I use? Do I take it off the high? Right? There's like fucking a million different things that can come into your mind, which make these systems subjective. So my problem that I see is people are teaching subjective strategies and marketing them as systematic. That's my biggest problem with this industry. Okay. So what we actually trade is sort of a variation of this entry model in the fact that if you think about 15 minutes of price action, so think about a 15-minute bearish candle. Okay. When you look at the smaller time frame, it's going to look like this. So this is the 1 minute, where you're going to have market structure, highs, lows, high, low, high, break of structure. So this 15-minute candle looks like this on the 1 minute time frame. You get a break of structure, you get a pullback into these models, blah, 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 right? It's all the same thing. It's not different. So, it's that whole thing of people are looking for this secret source or secret way. And what I'm showing you here is that there is no such thing. There is no such thing. Because a 15-minute bearish candle will look like this on the 1 minute time frame, where you're getting that market structure shift and the fair value gap and the order block and etc. And then it rolls over, right? It's all the same thing. Apart from this is not systematic and this is. That's the only difference, right? So yeah, rant over. I could talk about that all day, but my goal here is not to bash other people. Like, I'm not going to name anybody. I'm not going to do that. And for the most part, I just stay in the lane. I stay in my own lane and I trade, my own system, and I don't really think about anything else. And that's I talked about conviction and belief before. Well, one way to lose belief and conviction is to like spread your attention across all of, 5 different strategies or 10 different communities. That's one way to quickly lose belief and conviction in a trading strategy, right? Then throw a drawdown into the mix. Oh, there's no chance. So Um, yeah. My goal here, I need to be careful because my goal here is not to bash anybody. My goal here is to stay in my lane, trade my system, and to educate and teach you guys. That's the goal. So I'm not going to bash anybody at all. Smash that like. You know it, Andre. You know it. Appreciate it. It's one of those things, right? Like if people want to smash the like button, they will smash it. I would never ask somebody to do that, Andre. But I appreciate you doing that. uh, do you still have FOMO? Do you still have FOMO same time? Not really. Not really. I'm very at peace with what I'm trying to do. I'm very at peace with my strategy and how it operates and how often, like, we get 3 trades a week, 3 A plus trades a week. And for most people that's, maybe not enough, right? But for me that's more than enough, right? Um yeah, I'm very calm and grounded and I know what I want to see. So I don't really feel FOMO. Like, don't get me wrong, like I will occasionally get a little bit of it, but in general, like when you know what you're doing and you're competent and you have conviction, you don't really see the market in any other way. And that's a common thing, right? Like imagine trading this strategy and you're like, "Oh, we need price action." And you know about other entry models like market structure shifts, etc., right? Or order blocks. Well, a lot of that stuff can come over into your current trading, and that's where like analysis paralysis, it all stems from the over access of information. Like if you have way too much information, you're going to make you're not going to make thoughtful, simple, accurate decisions. So you have to sometimes unlearn a lot of things and strip back to the basics, right? Which can take time for sure. That stuff can take time. It's a common thing that I've seen in the community. Somebody comes in and they're like, "What about this order block? What about that fair value gap?" And it's like, we don't really look at that stuff. And like, yeah, sure, it's you might want to have some idea of it, but it doesn't help us make a objective decision, and that's what's important. Right. So yeah, back to price action. If you look very very closely here, so we have this high, we have this inside bar. We are still inside the confirmation. This is your confirmation high and low here. So the order remains here, and so if this does flip and break this low, I'm still shorting this market. I'm still shorting that. So we just need to remain patient, allow price to come to us, and if it's going to set up, it's going to set up. But we're not trying to force the market to do something. We cannot do that. That's where a lot of chart anxiety comes from. If you're trying to control things, if you're trying to, the way that I describe it is putting things in a box. So when you try to control things and put it in a box and define it too much, like forcing a trade, that's when you get chart anxiety. So the way to let go of all of that is to just kind of be at peace. Like if it sets up, it sets up. And I have no issue with just sitting on my hands today if the market doesn't want to give me signs of setting up. So it's getting to that point where you can be really comfortable with yourself and your strategy and what you're doing, and then following through with that. Really, really important. I feel like I'm missing a lot of your questions, guys. So apologies here. Let me have a look through. How do you join the community? So I'm not sure what you mean by that. Um, so I'll leave a link. You can join I don't really want to plug things on here at all. But you are asking, so I will give it. The website link is there. The Discord link, let me get that as well for you in case you mean that. But yeah, I don't want to shill anything at all on here. Uh, where is this? Let me just grab the Discord link for you guys as well. And that's the Discord there as well for yourself. Okay. Yeah, Andre. So it sounds like you're resonating with what I just said. Like you maybe trading got a bit slow and then you strategy hopped and you jumped, right? And that's like the common thing that, and I only know it's common because I've done it myself, you know, 8 years ago and for the first 3 to really 4, 5 years of my own trading. Okay. So yeah, if you guys push the like, see that? That's what I want to see over here from Hafid, right? If he's saying if you click the like button, Liam will do more lives. Maybe. No, of course I would. Like if this just blows up, I'll be live every day. Why not? Why not? Guys, talk to me. What would you say your biggest problem with trading is? What would you say the thing that you struggle the most with? Let me know in the chat. And I want you to be open. I want you to be honest. What's the one thing that you sort of struggle with the most? And I'm going to address some of them while we're waiting for this to set up. All right, we got a lot of comments in here, a lot of chats here. Um Okay, so the first one, looking at the profit and wanting to take every penny, that's a really good point. That's a really good point. And the fix to that, okay, so this is like what you're basically doing is tying money and the monetary value and you're putting that on a pedestal. Okay. And there's a few reasons why you may be doing that. Um, and so the fix to putting money on a pedestal or what you really want is to make money in trading. Like that's your sole focus, which sure, like we are all here to make money. That is like if you just strip everything away, it's like the caveman or cave woman inside of you. Like you want to make money, right? But what I'm saying is the way to fix that is you need to remove any aspect of money in your trading. So rather than your goal being, I need to make money, your goal needs to be, I need to follow my trading strategy to the T. Like your only focus as a trader is, can I follow my plan? Can I execute with correct risk management? Can I do that long term? Not today, tomorrow, this week. We're talking 6 months to a year. Can you do that without focusing on the money? And then what I can tell you is that money will be a byproduct of you doing that. Okay? It's really hard to not focus on the money and wanting money. But I'm telling you from my 8 years of experience, when I stopped caring about the money is when my trading exponentially improved. Okay. Ways that you can fix that is like, for example, you're tagged in a trade. Don't look at it. Do not look at your P&L, right? Like you're tagged in a trade. Let's say you execute on mobile. Phone goes away, right? Don't look at the money fluctuating up and down. That is not going to help you in any way, shape, or form at all. It's not possible. Okay. So that's something that I do is I do not look at the money. Okay. I'll enter the trade with the lot size and it's normally pretty fucking big. And I'm like, shit, that's a lot. Right. And then either on TradingView, you get told that you took a loss by price action. And then again, you don't have to look at it. Right. Or your take profit is hit. Cool. So removing the monetary aspect of trading and reframing and rewiring your brain is so important. It's not about the money. The money will follow. The money is a byproduct of successful strategy following. Okay. Yeah. Great point. Great question. Let me zoom in over here. See, I'm still just waiting for this to break the low here. So if we break this confirm low, still valid to take. Because why? Because inside bar, right? This is confirm high, and this is confirm low. So you're within that range. Imagine this like a range. Okay, so this is like a range. And so if we do break this low, you're going to be breaking out of that inside bar range, right? Okay. So we have 5 minutes for this closure. So we'll monitor that. In the meantime, let's take a look at another question here. Revenge trading. Okay, great one. Like this is really, really common. I struggled with this for so long, so long. The fix for revenge trading is to look at it from a psychological perspective. Okay. And what I need you to do is associate. Is that how you spell associate? No, definitely not. Anyway, right here, copy and paste Google, right? Associate. So say you just lose a trade, right? Associate clicking. So clicking again with losing money. So when you take a losing position, which is inevitable, you're gonna take losses. You gotta get okay with that. But what I'm saying is when you take a loss, associate clicking again with losing money. So the problem that most people have is what I talked about before, which was the monetary value. You're associating clicking with fixing the problem, which is make more money or make that money back. Right? That's the fix. And that's the way that our brains are wired, right? It's like, oh, I've lost money. As a human, how do I fix that? Oh, I click again. I try and make that money back. That's the natural motivation after losing a trade. So what I'm saying is if you can rewire your brain to associate clicking with losing more money. So if you click again, that's a negative outcome as opposed to your current brain, right, which is associating clicking with a positive outcome. So within that, there's that's really like psychotherapy. Like, don't get me wrong, I'm not a qualified psychologist, but that's something that's worked for me. Associate clicking with losing again. When I say clicking, I mean like sporadic clicking, like you take a loss, boom, you click and you take another trade straight away. You're never going to be doing that with a systematic system. Again, systems prevent you from doing stuff like that. So that's what I do. That's the mindset trick that will fix revenge trading. So just think, oh, I just took a loss. Like if I click that again, Not only is it going to be another loss, but it's going to be losing money, which is taking you further away from where you're actually trying to get to, which is, I hope, profitable, um, but also systematic, right? Yeah, feeling behind, that's a really, really common one. You feel like you're not doing enough. You feel like you're, like I think social media is merely one of the problems with that. Like you see social media and, maybe you've had a no trading day, maybe you've not took a trade or maybe you've took a loss. And then you load up TikTok, right? And, someone's took a win, right? I don't really go on social media for that reason because that's not going to help you in any way, shape, or form, right? So removing social media is often, or not necessarily removing, but limiting is often the fix to not feeling like you're good enough. And that's the whole thing that I spoke about before, which is staying in your own lane. So I don't compare myself to anybody else. Like, what's that saying? Like, comparison is the thief of joy, right? It is. Like, you could be doing amazing. Like, for example, our strategy, we've done 107 R in 2 years. It's fucking incredible, right? But if I could easily go on YouTube and find somebody that's claiming, again, I don't know if it's true, that their strategy's done 400 or whatever. And then comparison comes in and you don't feel like you're moving fast enough and you're behind and so staying in your own lane is a fix to um, that fear of moving slow, right? Because all you can do is not only your best, but it's that thing that I said before, which I'll keep harping on about, is trading your plan. That's all that you can do. That's your job. All right. Live every day, please. Maybe. I mean, I trade live every day with the exclusive, but I'm yet to get a schedule for the YouTube. I think once a week to begin with, maybe every Friday. I don't know. We'll see. Let me see here. So I have an action to take here, 33 seconds. So if we close bearish and we break this current candle low here, I will be shorting on the break of this low. Um, yeah. So now the position is going to look something like this. Okay. All right. So this is using candle theory. We have an inside bar, which I talked about, but we now have a bearish confirm within that inside bar. And so you can move the order from original confirm to inside bar confirm. So you get a better risk to reward. Um, and you're using naked price action, you're using recent price action to confirm that. So this is now the new confirm high and the new confirm low right here. So now if I zoom in, we're looking for price to break this low right here. So that is 50. So this is gold, right? 5083.66. We're also after the NYSE open, so the New York Stock Exchange open. And so we expect volume to come into the market. Now, does that mean that it has to be lower? Of course not. But if the market wants to continue lower, it will break this low and, it's going to show intention here, right? So the expectation here is that this current candle's making the top wick, and then we flip and break this low and momentum steps in. That's the expectation. So now the risk to reward is as much. So it's going to be here targeting 4983.22. So the stop loss is now not as large, and so we don't need to target as much, right? But notice how the stop loss is still above the liquidity sweep high. So that doesn't change, right? The stop loss will always be above the liquidity sweep high, even if your confirmation shifts, right? Because that's ultimately where you're wrong. The upper bound of the range, right? So let's watch this together. Hopefully momentum can step in. We break this low, tag short on the break. And then I guess let's see what happens after that, right? Yeah. So much patience. Liam, what if the time passes 10:30 and then the market breaks down? Well, it depends. I mean, if you're not tagged in, if you mean like, oh, you're not tagged in by 10:30, you're done for the day. You're done for the day, right? You close everything down. That's it. And you know, that's not your plan. If the market breaks down after 10:30, well, the market breaks down after 10:30. That's not your plan. Well, it's not my plan. Could be your plan. And so that's okay. You know, it is what it is. But when we go back to what I talked about at the start, which is intraday seasonality, when does the market trend? To put that very simply, it's during these windows. And so you should be like, if the market is going to roll over, most of the time the high is made in this session, in this kill zone window, the high of day, and then we get the continuation for the back end of the day. And all that I'm describing there is the daily candle cycle, right? Like imagine this is a daily candle. Let's say this is a bearish candle. In general, what you get is you have an open. So here is here's the open, right? We make a top wick. So this is the top wick here. So that's a pullback. This is manipulation. That's like where we are today. This is here, the top wick on the daily candle. And then we confirm we are somewhere in here with a stop loss here. And then we're expecting this daily candle to flip, right? Flip from making the top wick to flipping bearish and then continuing for the rest of the day. And this is your high of the day. And that's the daily candle cycle, which is really what we're trading. You know, the daily candle, the cycles of one candle, 24 hours of price action, and framing it on an intraday basis. So what I'm trying to say is that this manipulation in general will be made either in the London window, the London kill zone, or the New York kill zone window. And so you can get positioned somewhere in this top wick. And then if that manipulation happens outside of the window, cool. You're not looking at the markets. That's okay. Right? You're just going to come back the next day. And that's fine. So yeah. We need sellers to step in here. We need to break this low momentum to step in. I mean, we don't need anything, right? To be honest, that's a bad way to put it. We don't need anything. But if the market wants to roll over, that's what should happen, right? All right, Tariq, you said you want to enroll in the exclusive. You can do that. I'll just put a link to that in the it's pinned in the chat. You can't miss it. Thanks for this. I can see you guys corrected my associate spelling, so thanks for that. How long does it have to stay in consolidation before it's invalid? I'm not too sure what you mean by that. Jono, I've got you. So if we do get tagged in, the TP here, my TP will be at 4, to be exact, is 4983.504. That's where I would, if we get tagged in, that's where I'm going to be exiting full positions. Everything, yeah. What if we wait past the kill zone? Then you wait past the kill zone. Like, you need specific time windows to trade. That's when the volume comes in. And so if you're trading outside of the window, you're just trading you're trading everything. So you need that specific time to be trading. Is this an A+ setup? Yes, it is. How are you guys trading gold with prop firms? I am just FTMO. FTMO. What I'm thinking about here is, in which I think is really important, is we're not tagged in yet. Sorry, I'm not tagged in yet. And so you've got to think about when would you be sort of invalidating your idea. And so this is the confirm high and low right here. And so if we break the confirm high, that would invalidate this setup. So again, this is using candle theory. Yeah, because that's telling you that sellers took control here, but they've not been able to sustain that by breaking this low. Like if sellers are going to step in, they're going to break the confirm low. If they break the confirm high, the bearish high, well, that's a bullish signature in price. You don't want to be shorting into that. And so that's why that would invalidate, and that's why that would make you want to be sitting on your hands, because that's telling you, like, the way I think about it is like, oh, like there's something fishy going on here, right? Because if it's going to roll over, sellers tried, we should break that low. So this is telling you that buyers are sort of forming a base here, which you don't really want to see. So yeah. So right here, we've broke the confirmation high. Therefore, my sell stops and this idea, I'm now sitting on my hands. I'm now sitting on my hands because we've broke the confirmation high. That's not what you want to see. That's not a bearish sign that we are going to continue lower, right? Think about what we've seen. We've seen a liquidity sweep, seller stepped in, right? We were like, okay, well, they should step in here. We are getting signs that they're stepping in. Now, Buyers are showing their hand and it's going, okay, well, we've broke the confirm high, sort of looking like a base to continue higher, right? Does that mean I'm going to trade it higher? Of course not. Of course not. But it's important to know like who is in control of the market at certain times, right? Have I ever not been paid out by FTMO? Not at all. Every single time that I've requested a payout, it's normally in my bank within 24 hours. Sometimes quicker. It sucks now? Not really. Why does it suck? Right? It's just another day at the office, right? It shouldn't suck just because you're not getting a trade, right? If anything, you should be framing that positively and being like, okay, I'm following my plan, and sort of having positive self-talk about that, you know, congratulating yourself for following the plan as opposed to, oh, it sucks now. Like, come on, you're better than that. So you need to, if you think this sucks, you need to get used to trading because we only get 3 A+ trades a week. 3 A+ trades a week. This is based on historic data on average, right? Sometimes it's more, sometimes it's less. Last week was a no trading week. Um, and it's that whole thing of you can't control when trades are going to be setting up. You cannot do that. I've took 2 trades this week. One winner, one loser. Right. So it's yeah, it's getting, if you think this sucks, you need to maybe ground yourself a bit more. Hmm. Yeah, that's true. There's still a bit of time for Asia high taken out. Um, exactly. Yeah, stopping you losing, right? Like if you did enter on this closure, like I spoke about this before, if you enter on this closure here, right? If you enter on this closure, you just got stopped out by not being patient, by not waiting for it to break the low. So it actually protects you to avoid a lot of losses, right? So yeah, one thing that I've sort of realized over the years with trading is like it's not about the winning trades that you take, it's about the losing trades that you avoid taking. Like if you go back through and have a look at all of the silly trades that you took and you got rid of all of them losses, you save yourself so much. So it's not necessarily about getting a better strategy or filtering to make the strategy better. For winners, it's about filtering the losers out, right? And and avoiding them. That's where a lot of the gains are made from. And how often that translates is by sitting on your hands a lot. And that's why trading is so hard, you know? Like for me, it's trading. You're gonna trade 2 sessions a day, 5 days a week, right? That's 10 sessions. But I'm only gonna execute in three. I'm only gonna take 3 trades in 10 sessions, right? So think about how selective that you're being with that. And that means that you're only taking the high probability, the A+ setups, um, and most of the time you're sat on your hands. But that's how trading is, right? The analogy that I use is imagine you're a sniper, right? You have your camouflage on, you have your strategy, you have your gun, your armor, like your helmet, everything, and you're lying in the grass. Okay, you're not really moving and you're waiting for that target to come to you. You're waiting for price to come to you. And then only when that target is in the right area, in the right, lighting, and you can see him and you can get a clear shot, that is when you execute. And trading is nothing, it's nowhere near different to that. You're so patient, you have to wait, you have to sit on your hands most of the time, just like a sniper does. Sometimes you miss. Sometimes you miss. And it's getting okay with doing that long term, right? So we've just took out Asia high. So my thought process now is, can we flip bearish? Can this candle flip bearish? EMAs are still in order. Okay. So can we flip and confirm? We have 12 minutes to do that. If not, it's going to be curtains. It's going to be curtains. Let's take a look at US 500 just while we are waiting. Yeah, this is just continue lower. Continue lower. Nothing to really look at on US 500. That's true. Here's from Skillsman, right? Skillsman Swift. What sucks is working 40 hours a week when one trade can replace your monthly paycheck. I mean, that is correct. So you get paid. That's a good way to think about it. You get paid to be patient as a trader. You get paid to sit on your hands, and you get paid to only execute when the conditions are perfectly right. Before joining, I took 3 trades a day with FTMO, blew 31 accounts. There we go. Testimony to overtrading. I sympathize with that. Like, that sucks, but I've seen your own personal transformation, Draper, and now, like, you were okay with a no trading week, and you've come so far. So it's going from that 3 trades a day to scaling things back to a handful of trades a week, and being really patient, right? Yeah, 31 accounts. Yeah, you could have gave me one. Hey. So yeah, now the question becomes here is still sell buyers. We've now took out fresh liquidity, which I talked about earlier. Like, what's the second scenario? And so we need this current candle to flip and close bearish. So that's my exact thought process right now. So this current candle has to flip, close bearish, and that's the only way that I'm going to be shorting this. If not, it's curtains, and you hang up your boots and you come back Monday, right? And that you have to get okay with that. It's tough. It's tough. Best customer. Yeah. You should get an award from FTMO for that, Draper. You should be like the spokesperson for FTMO. Maybe I can connect you with someone. You should get like something in the post for that, surely. You're like it's like, imagine if you went to a restaurant like 31 times, you would get like some sort of trophy. Yeah. I want every single one of you to smash the like button. That will encourage me to do more free streams like this, and I appreciate it so much. So if you can, smash it. If you have fingers, smash the like button. Okay. Hopefully this sets up. Yeah, they might like double your first payout. They might like feel sorry for you, so they're just like, "Oh, I'm just gonna double it for you." Double XP. Double XP on your payout. Yeah, I don't know, man. We need this to flip. We got 7 minutes. We need this to be making a top wick and then to flip. Like, we're not trying to force this, but that's what needs to happen so that we can be tagged in within the kill zone. Otherwise, you're now outside of kill zone, and well, for me, that's um, a no trading window, right? Outside of this window. All of this white space, well, and Asia. So this is trading window. This is trading window. And then anything outside of these shaded windows, there's no executions. So if we get outside of here, that's you done for the day. Well, it should be. Unless you like close this stream down and go hunting for another stream, which is a possibility. Ugh. All right, Taz, no worries, man. Nice to meet you. Pleasure. Yeah, not the like button. Not the like button in the chat. The like button on the live stream, like on the YouTube. The proper like button, not the one on the chat. I see somebody's been spamming that like all fucking day for 2 hours. I hope you've not been clicking the wrong one. um, First time watching, welcome. Welcome, welcome. Very clean, very clear. That's what I tried to do. Like, I tried to remove a lot of the fluff, the noise, the BS, and just give you that sort of simple, no BS approach, a systematic way to view the markets. That is, not what I believe, but just what the data tells me to do, and to sort of hold your hand every step of the way. That's the goal here, right? So I appreciate your feedback. Thank you. How do I manage losing streaks? I use something called account rotation. So when you use account rotation, you don't really feel losing streaks. You don't feel drawdowns. And I'll get onto that in just a moment once we've seen this closure. Maybe I'll have a streaming for 2 hours. My attention span is going a bit. So this is a framework that I use for account rotation. Let me make this. To be fair, we have quite a few minutes for this closure, so I can run through that right now. So this is how you mitigate drawdowns. This is how you do not feel. You're going to get you're going to feel it a little bit, but it's going to mitigate a lot of drawdown. So imagine that you have 5 funded accounts. Really, let me just backtrack a bit. Account rotation is when you're slowly rotating between accounts. So in specific funded accounts. So you're going from one to another, to another, to another. And by doing that, you mitigate drawdowns and you mitigate a lot of risk. So an example of this would be you have 5 100K funded accounts. So this is how it looks like for me. All right. It might look slightly different for you, but the principle can be applied to all accounts, right? So what you're going to do is you're going to trade 1 or 2 of those accounts at a time. So example, today, you trade both accounts. You do not trade 3 accounts. Then the next, let's say that this trade was a loser, this trade here. Then the next trade, you take these 2 accounts. You do not trade the other 3 accounts. Okay. And let's say this is another loser. And then the next trade, you take these 2 accounts. You don't take this. You don't take this. You don't take this. Let's say this is a winner, argument's sake, right? Well, this account, these accounts are now up 2R, 2%. So that's $2,000. So what you're going to do is push that to the side, get it paid out. That's 2R, right? You're not going to keep trading it. That's the trap that most traders fall into. Their account's up like $2,000, $4,000. They get greedy and they're like, "Oh, I want to make that 5K, 6K, 8K, 10K." And you're just like literally it's just pure greed. And so you're going to push that to the side, get it paid out. Then the next day, like let's say you trade the other accounts. Let's say that's a loser again. Okay, so that account's a loser. Then you trade these accounts. Let's say it's a winner. So you now have another two R that you're getting paid out. While your strategy is in a drawdown, you've still been able to take 4R out of the market. You've still been able to take $5,000 out of the market. Let's even just say $2,000, right? You've still been able to do that using account rotation. So it's the recycling of accounts and rotating. And so even if you're in like an 8R drawdown, you still, I still took thousands and thousands of dollars of payouts during a drawdown using account rotation. And you can as well, right? So understand, like, say you are in like an 8R drawdown with a strategy or a system. This account, these accounts might be in like a 1R drawdown or a 2R drawdown. This account might be in a 2R drawdown. These accounts might be in a 2R drawdown. So you're not feeling the brunt of the drawdown. So it mitigates a lot of the risk. Whereas these other accounts that are getting paid out, they reset. And so you just keep rotating and trading and getting paid out. And so I have a threshold, which is whenever my accounts are up to R, I push it to the side and I get it paid out. I get it paid out. And that's the process that I follow. And that's how we can play the prop firms at their own game. Because they want you to keep trading. They want you to keep risking. Because as you do that, the probability of you giving money back increases. Okay. So this helps us to beat the prop firms, but not only that, to play them at their own game and do the opposite of what they want you to do. Right. So yeah, that's account rotation in a nutshell. Most of us can't afford multiple accounts. Yeah, it's tough, man. I feel that. I feel that. Well, you need to. You need to. So if that means that you have to go for a smaller account, like a 5K or even smaller, and you can spread it that way, that's what you do. That's what you do, right? So, I'll be honest with you, like people that are taking this very serious, they are willing to throw money at this. They're willing to use account rotation, and that's how you mitigate a lot of risk. But I get it. Like I really resonate with you because I've been there as well, where it's like getting your foot in the door is like the hardest part. Like getting the first few funded accounts, the first few is like the hardest bit, and then you build, and then you get paid out, and then you scale and you reinvest, and then that kind of starts the cycle. But it's getting like the foot in the door, which is the hardest. So I really, I resonate with that. Um, and I feel for you for sure. Yeah, I mean the first payout is everything if you need that money, for sure. And it's why I encourage people to actually trade alongside full-time jobs, right? Because that again, before I spoke about how money, like the problem that people have is they're putting like money on a pedestal, and they are um it's the monetary aspect that's so intriguing. And so when you actually have a full-time income coming in, the stress is not about making money. You don't have that stress. And so, I really get it. Everybody's so different, different circumstances. Your circumstances are different to mine, as are different to somebody else, etc. But having a full-time job mitigates a lot of risk. And so you're not as emotional around making money. So, yeah, like sometimes people say to me, like, should I just quit my job and go all in? And I'm like, no, 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 no. You can, as long as you have like, I don't know, 6 to 12 months of expenses. But I will still say that having some form of income helps to mitigate a lot of that risk. Having some form of income takes away the monetary aspect so that, maybe you lose an account. Cool. You just look at it objectively and you buy another one, right? And that sounds like cope, but it's not. Not when you have a framework and a system and you're using like account rotation and scaling techniques, etc. Yeah. 1 to 500 leverage is risky. Oh, for sure. I that's how I got into this shit. Right, at 1 to 500 leverage, gold, NFP, um, student loan. It's a slippery slope. It's a slippery slope. When's the next live? I'm not too sure. But if you want to keep up to date, I recommend joining the free Discord community. So I will notify you when and why I'm going live. So if you just have a look in the community in the chat, yeah. So yeah, this is not set up right here. So you can see we did not close bearish. So this candle here did not close bearish. And so this current candle will be closing at 10:30 a.m. Eastern, which is 1:30 UK. The problem is that you will then be getting tagged in outside of kill zone. And so what this means is that I am done for the day. And that is how systematic you need to be, right? It's either tagged in within kill zone or it's not. And so it's black and white. It's either yes or no. And so this current candle will close at 10:30. Well, that's outside. That's now going to be tagging outside of my window. So then it's being accountable to after the stream, close everything down and come back Monday, right? And to not go hunting or forcing or taking silly trades, right? M15 time frame is not scalping. Who said it is? Did somebody say it was? I would call M15 trading more intraday or I would call it hybrid trading. It's not swing trading, of course. It's not the 1 minute time frame. It's sort of in the middle. It's sort of hybrid style is where I think we fit in. But it is still intraday or day trading because we are executing on an intraday day trading perspective. We are closing end of week, or you often find that your results are you find out within the session or end of day, right? How many trades have I taken this week? I've taken 2 trades. The last trade that I took was yesterday on US 500, and it was this trade right here. Right here, which, yeah, it was this 2R trade yesterday. I took this live on the exclusive stream. How did this strategy come into my mind? That's a really good question. It's 8 years of watching how the markets work. And it's an amalgamation of probably all of the knowledge that I've learned over the 8 years. And it's also using my mathematics and finance degree to look at things objectively and systematically, and to put that together into a process system where everything's defined. so that you actually have a statistical edge long term. So yeah, it's just a mixture of everything that I've learned over the years. Um, yeah, all sort of thrown together into a system, into a process. Yeah. Okay, cool. So that's me done for the day. I appreciate your time and your support. I appreciate you smashing the like button. I hope you have a great rest of your weekend. If you haven't already, check out the free Discord. There's a link to that in the chat for the next live stream. If you have any questions, you can join the free Discord. You can reach out to myself personally. If you have any questions at all, as always, I appreciate your time, your support, your efforts, your questions, everything. So have a blessed weekend, rest up, and I'll see you guys Monday. Bye-bye for now. Take care.